If you are a frustrated trader with no trading plan, this video is for you. Make sure you stay to the end of the video because step number 4 is the one that will take your trading to the next level. What's going on, guys? Franco with Trading Futures Live. In this video, I want to give you 5 simple steps that you can use to assemble a trading plan. So let's jump right into it. All right, I want to say that these simple steps weren't so simple for me. I had to lose money and suffer through the process to get to these steps. And if I were to start again, I would apply them in order. The first step is go to the charts and seek for patterns, right? Trading is very individual, so I don't want to tell you how to trade. If you need to use indicators, if you need to not use indicators, if you need to find for topping patterns, if you need to jump into the trend, that's very personal, right? And I do have different setups that I trade, and but those setups might not work for you. So when I refer, go to the charts and seek for patterns, and everything has to be aligned to your psychology, how you handle losses, how patient you are, right? So, but let's jump right into the charts. All right, so I want to know what happened here because the market opened up high, is sold off a little bit to closing the gap, and then it started to reverse, right? So I want to mark this area and see what happened inside. And one technique that I've been using since my beginnings is multiple time frame analysis. That's, I think, one of the things that I haven't changed. This is the 15-minute. Let's go to the 3-minute, right? And I see, all right, so we close the gap. This is a perfect, this is a very common continuation pattern. It comes, close the gap, and then continues to the upside, right? So, but I don't stay here. I go to the lower time frame that I use to trade is the 500 volume bar, and I can spot, and this is the circle for the 3-minute, right? So I can spot a classic W pattern, and this is a reversal pattern. So I come here, rejected, came down, rejected again, and finally it broke to the upside, right? So here you can have different ways to trade, and you can either enter this trade right here when it's retesting these two highs, right? Meaning you were risking this entire area, right? And you will put a limit order right here, and your target has to be around here, right? All right. Or you can say, all right, I'm gonna wait for this thing to confirm that actually the W pattern is effective, right? I don't want to just jump in right here because the trend for the day is actually down. So I want to wait for this thing to hold here, and then I would enter this trade breaking out right here, right? That's a valid statement. And then your target has to be around that circle as well. Now your risk is lower, your entry is not as good as this one, right? But that's certainly a valid type of trading system, right? So in this one, you do have a better field price. Your risk to reward ratio probably would be a little bit better, right? Because you have all these conflicting areas that didn't work, but it could have worked to the downside. But those are two different styles. So what I'm referring here is you need to investigate. You need to go down to the chart and try to look for patterns, right? So that's one way to trade this. And And when I see investigate, you want to see external factors that can influence the price. Those who watch me live, I do correlations. I do correlations with the dollar index, the DXY. I do correlations with the tick chart and the internals, the ADQD. So you can assemble a system around all those factors, right? Aligning, and then you trading. Now I'm just going to the small picture of just watching what is happening in the chart, but in reality I go and have this. I have these different factors that are aligned for me to place a trade, right? And what they give me is a odd enhancer, so the probability of me winning a trade is higher every time I take one, right? Because let's say I'm just trading, I'm just simply watching this chart and putting orders here. What if the tick chart is completely messed up, is not aligned? So the probability of this thing doing completing the pattern is very low, right? But that's the topic for another video, correlation. How do I use correlations in my trading? For now, I want you to be sneaky and see what happens every time the chart changes direction, or if it changes direction, where you can jump in, and how probably is that the price will continue. And how do you do that? You go to the charts, you need to read the chart, you need to study several days of trading in the chart and see, oh, look, every time this happens, that happens. Every time this happens, the other happens. Okay? So I do check for another external factors. And for me, and this is very personal, I do like when the 4-hour candle closes and a new one opens. That is 10 a.m. and 2 p.m. So the candle from the 4-hour candle from 10 a.m. to 2 p.m. is the highest candle, is the highest volume candle of the day, right? So that's a very important information for me. If an area is created at 10 a.m., that means that could mean trend reversal, right? Or just a continuation, right? But for instance, if you have this W pattern happening at 10 a.m., there's a very high probability that the trend is going to change, right? But that's not for me to tell you, but those are the assumptions that I do. That's how I think to look for patterns inside the chart. Also, I don't limit to volume or information that the chart gives me. I also like to put personal factors. For instance, I do like to take trades when the 7-minute candle opens. That's very particular. I haven't seen any other trader that uses the 7-minute chart to begin with. But for me, if the 7-minute candle have 2 minutes left, is a very high probability that the trade will fail because of how my system works. If, for instance, I do a lot of breakout and retest, if the retest is happening when the 7-minute candle is old, most likely that the 7-minute candle is going to continue going, hence my trade is not going to work. And I can explain that. I do explain that on the lives every day. So if you join me, you will see how that works. But on the opposite side, if I do have a trade set up and the 7-minute is about to open, that's the highest probability for me. And I'll show you how I get to know that later in step number 3. All right, but for now, let's go to another point on the chart so we can look for another pattern, right? And these are drills. This is very important. I started to do that after I think 2 years or 3 years after I started trading. So it took me a lot of time. All right, so let's say I want to check on this pivot, right? Why the price was going up and it was going up for the previous day and then a continuation today into the trend, but then it reversed. So what happened here, right? I want to again go down in time frame, and let's go to this. This is the time, right? Same thing. It came up, came down again, created a new high, and then broke out to the downside, right? It broke this pivot. It broke the trend. It broke the continuation of the trend, right? Now, what happened later? And this is the tricky part. Market is very dynamic. You cannot stick with one pattern and say, all right, when this thing happens, I will trade this thing blindly, and then I will short right after this breakout, right? So it doesn't work like that. I want to have another things aligned. For instance, for me, internals and the dollar. Those things are very important for me. But again, you can either put a trader right here. Let's say you want to risk all this, right? And you put a limit order right here, and your target will be down here. Or you can go ahead and wait for this thing to happen and risk all this. And your target has to be right here, right? And all depends. This is a generic 3-to-1. Sometimes I go for 5-to-1s. Sometimes I go for 3-to-1s, right? Step number 2, always set. What that means is a stop, entry, and a target. I don't want to enter a trade without a stop and a target. Why is that? I have an account size and I have risk management rules. I don't want to risk X amount of money and make half of that X. Why? Because all comes to the winning rate that you have. But for now, I want you to understand that you need to have a stop and a target. We will go later to the ratio on where to put those. But for now, I want you to be careful and have a stop and a target. And how I do that is I just, if you happen to have NinjaTrader, right? I go here, I put a long here. So this will be a entry, the stop, and the target, right? If you have a NinjaTrader platform or TradingView, the majority of them they can give you bracket order options, so you can place your stop, your entry, and your target. Step number 3, and that is having a coherent risk and reward ratio. And what I mean by that is that you need to make more money of what you risk, right? And all comes to your winning rate. But let's say you are starting. I don't have a plan. I don't have a trading plan. I'm going to start seeing if my plan works, right? I would recommend you to start with a 2-to-1 standard risk and reward ratio, meaning you come here, and if you are risking this, your target has to be, let's put here a 2-to-1, right? Standard 2-to-1. If you are risking this, if you enter the trade on the yellow line, I want you to at least try to aim for a 2-to-1 risk and reward ratio, right? This is a very important step for me because in my trading system, I don't win the majority of the trades that I put. And it was kind of hard at the beginning, but later when you understand that you are gonna win certain amount of trades and then you're gonna lose certain amount of trades, you need to adjust that risk and reward ratio so you can be profitable, right? Because that's the end goal, or the final objective of trading is you making money. In my case, I do win 42% of my trades. And if I don't have a minimum of 3-to-1, is not a profitable plan for me. But I will tell you, 42%, if I go for 3-to-1 minimum, which is my case, minimum, I go for 3-to-1, right? That means that I need to win 1 out of 4 trades just to break even. If I go ahead and I risk 1 and I make 3, I can lose 3 times and then I will still be in a break even, right? All right, so what if you risk 1 to make 1? Then you need to be 50% accurate just to break even. And to make money, you need to win 60% of your trades. That's not an easy task to accomplish. And based on my experience, I've been doing this for 5 years. Being right in the market is the hardest thing to do, right? So the best way to approach to trading is just seeing it as a number, right? As a universe of trades. Next trade is not better than my previous trade, nor my other trade, right? They're all the same. They have a probability of working. So if I have a setup, it might work, it might not. In none of them, I'm risking 50% of my account, nor 0.1% of my account. I do size accordingly to risk between 1 and 1.5% of my account in every trade. So in the long run, I can grow the account. All right, let's go to step number 4. For me, step number 4 is the one that can take you to the next level. And step number 4 is track your results. And I got myself out of the way because I need to show you this. This is for me the most important step of all. Tracking your results will take you to the next level, right? And it certainly did for me. And I do use a software called Edgewonk, but you can use any other trading logging platforms. There are numerous there. This one is the one giving you the hard numbers, statistics, where you are good at, where you are bad at, how you can improve, how stretchy is your trading, how much room you have, are your zones, are the entries good, or you're taking too much heat. All those statistics, you're gonna get it from your logging system. I happen to use Edgewonk because I think is one of the best because of the simulator that it has. But you can use any other logging system to log your trades so you can follow what you're doing, right? And this is me telling you, all right, I don't need to teach you how to trade. You can certainly do it yourself, but you have to be very systematic. You need to approach trading as a business. You need to improve. If you don't measure, you cannot improve, right? So let's jump right into the Edgewonk here, and I want to point what this thing does for me, right? So, all right, so I go to the filters and I go to the advanced filters, and here when it comes to play the first step, right? Go to the chart, study them, and find patterns, right? When you find patterns, you correlate them with what happens later, right? For instance, if you see this, there you go. I want to click trend on favor, right? And good tick. And here, I want to see ADD coherent, right? So if we go here to let's open up this a little bit. If we go here to the trade analytics and by outcome, right? All right, in this this filter, I can see how overall using this and let's click this to have them all match, right? So I can filter better. All right, so using these three custom statistics, I can see how when the ADD is coherent, the tick chart is trending in my favor, and I enter the trade when the tick is in a good location. Out of 26 trades, I won 11, 10 break-evens, and just 5 losers, right? So I started to see, wow, when this thing is trending, when the tick is trending, I just need the ADD coherent and a good tick location, and then I do have a very good probability of winning that trade. I ended up making 21 R. Look at the win rate is 42%, but that doesn't matter. I make in average 361 per trade. Look what it changes when I change one of these ADD coherent from ADD coherent to ADD not coherent, right? Wow. Look, I ended up losing money. That's what the logging software can do for you. You can look for patterns in your trading. You can spot what are you good at, and then just start applying that more than the other type of trading, right? And you got to be conscious and see, all right, when I do this, this happens. When I do that, this thing happens. And why I don't say when the market is trending, when the market is sideways, when we are in a box, when we have big swings, because it got nothing to do with the market. It got all to do with you. One thing that I do like about H1, they don't sponsor this video, but I do like about H1 is that they have a simulation, a Monte Carlo simulation model where you can see your trading performance, and you can simulate your future if you keep trading this way, right? And also you can also filter this thing. So what if we go back to the same settings that we had? ADD coherent, tick trend on favor, and good tick location, right? Same 900 trades, 20 simulation. Wow, look at this. Spectacular, right? So what should you do? You just stick to this thing. Every time you have ADD coherent, a good tick location, and a tick trend in your favor, then you put the trade. It might win, it might lose, because I didn't win all these trades, but the majority of them were very profitable. If you don't log your trades, it's impossible for you to understand where are you good and when you're screwing it up. All right, step number 5, discipline. I know it's easier said than done, but I think discipline will take you where the talent will not. Disciplined person, you can stick to your plan, not breaking your rules, and try to just be patient and let trading continue its course. Is a thing that it doesn't happen overnight. You need to spend the time. You need to invest the time and see the charts, look for patterns, and practice. You can, if you use Ninja Traders, you can download data and just practice without risking any money, right? I do not recommend trading in sim for too long, because it's a very different game from a real money. But now with micros, you can go minimum in size and risk probably $30 per trade. Is something very, very small, right? And you can trade real money. You will have the real sensations and emotions involved in trading. And on top of that, you can not only practice the technical aspect of trading, but your emotional aspect of trading. Also, I want to give you a tip on the discipline step. is that if you have some security measures, right, it can help you to stay disciplined. For instance, in my NinjaTrader broker account, I do have kill triggers. If I lose more than $800, I cannot keep trading in the day, right? That's very good, because if I happen to lose $800, I cannot lose $2,000, right? On the Rhythmic account, when you trade funded accounts, you can certainly set those limits, but you can immediately change them and keep trading. On the Ninja brokerage account, you cannot change, but you have to wait 24 hours, and that period of time is usually enough time for you to calm down and be conscious of how you traded, the mistakes you made, and whatnot. Another point that is very important for me is the accountability. The discipline comes with the accountability. So that's one of the reasons we created this channel, to have more accountability, right? I'm trading in front of you guys. I want to be certain that I don't want to be certain about the result of the trade per se, but I want to be certain about my reaction to what happens. If I lose, right, I can't do anything. I cannot just randomly place another trade because I'm trading in front of people, right? So accountability, even if it's a partner or a friend and someone that has some power over you, right? Or a YouTube channel, for instance, like my case, that will help you to stay disciplined, right? So with that, I'm gonna wrap up this video. 5 simple steps, right? Number 1 is go to the charts and seek for patterns. Number 2 is always stop entry and target orders. Number 3, risk management. Number 4 is log your trades, and that's on a star right there. I do think this is the most important. And number 5 is the discipline. Thank you. Please, if you like this content, like, subscribe, and share so we can grow this channel. Later.